Hey Bulls and Bears, it's Friday, August 21st, 2020. Home prices set new all-time high. We're going to talk about that. We're going to talk about what got us there and where we may be headed. We're also going to talk about the pending disaster with Social Security and the big danger that we're all in. If you expect to have Social Security available for you, you might not want to count on that. You might want to prepare in other ways besides expecting the government to be there for you to pay you back what you're paying in to the Social Security fund. Let's take a look at a home price chart right here. Home prices have breached 300,000 for the first time, and this is the median home price nationwide. Of course, in some more expensive areas, we see beyond 300,000 price levels for a long time here in California and some other expensive areas. But nationwide, the median home price breached 300,000 for the first time ever. Now, when I'm reading the comments about this and people talking about it, I see things like unbelievable, impossible. How is this happening? All right, folks, this is not rocket science. It goes back to one basic principle. When you can create money out of nothing, you can cause asset prices to rise forever, all the way into hyperinflation. It's happened in other countries. I'm not saying it's going to happen here, but it's possible. And when I first started saying back earlier this year amid the shutdown, I said, well, they're probably going to find ways to keep the housing market strong, keep home prices propped up, and we saw things unfold exactly like we predicted. Why? Because there's an incentive right now to keep this economy propped up. Now, at the same time, yes, there are forces in this country that want to see this economy collapse. Right? But the ones in control right now, they are trying to keep this system propped up. Okay, there's bank deregulation. All right, but again, this is not going to last forever. And I see a lot of people talking about the best way to prepare. I don't think anybody knows what I'm doing. I shouldn't say recommendation because I don't give recommendation or advice. What I'm doing is preparing for both cases. If you think there's a possibility that we could continue to see this inflation, you're going to want to have hard assets, right? And maybe you're riding the stock market up. I personally choose not to be in the stock market because I am very cautious about the environment that we're in. I expect major events to continue to unfold the rest of this year, and I'm talking about socially, economically, all of the above. I expect things to get worse in the cities. I expect the violence to increase, and I expect major things to happen. It wouldn't surprise me at all if we saw some sort of banking system outage. We've already seen it here and there with ATM outages and banks reporting zero balances and quote-unquote glitches. I'm just being very cautious. Maybe I'm being overly cautious, right? But that's me. That may not be your position. Do your own due diligence and research. Based on what I've seen, I'm being cautious. I'm on the sidelines. But I hear from people all the time. They made this much in the stock market. Got a message over on Twitter from somebody said they just made $5,000 just in the past 2 months in the stock market. That's great to hear. That's awesome. All I'm saying is if you are not a stock market expert, a day trader, you might want to be careful. Even if you are, you might want to be careful right now. And I was met with heavy criticism when I said earlier that they were going to find ways to keep this housing market propped up. Now, on the surface, it may seem impossible. We have ultra high unemployment, 30, 40, 50 million people out of work. And I look at the real unemployment number via shadow stats. I don't look at the official numbers. And when you see such drastic, devastating unemployment, yes, you would expect deflation and falling prices. But remember, we have a lot of things set in place right now. The moratoriums, they're not working 100%. There's still people getting evicted. There's still people losing their homes. But overall, it is being propped up. But I am waiting to see what's going to happen, waiting for the inevitable. All right, the bankers, they come out and they said they want inflation. They want to cause inflation. They're trying to tell people that there's no inflation. Even though in some areas home prices doubled and tripled just in the past 10 years, they're telling us there's no inflation. All right, also, let's take a look at the housing bubble peak prices right here. The median home price was about $230,000. And let's see if we can draw a line right here. It's kind of a big line. Let me draw a smaller one. Okay, 230,000 right about there. And now look where we are at with the green line up here. So if that was a housing bubble, and you think this is not a housing bubble, wages have not kept up with home prices. Okay, again, many areas home prices doubled. Have wages doubled? No, not even close. And now wages are dropping. Companies are lowering wages and cutting hours. Right? So this temporary bump to the housing market is going to come to an abrupt halt, and the crash, the decline, whatever you want to call it, is going to be much worse than the crash of the 2008 housing market. When the manipulation finally ends. Right? And it's not just prices. Home sales are up 8.72% year over year. And we have reported on this. We have people leaving the cities, people that were paying very high rents in the cities, and they were given multiple reasons to get out of the city. One is safety, with everything happening right now with all of the unrest. Two, a lot of people working remotely, people that did keep their jobs. Many companies are offering remote work, so people are choosing to go buy in a lower priced area versus staying in the city now that they no longer have to be tethered to their office building, to their corporate building. And then of course you have the lending side of it with the ultra low mortgage rates. The banks were taken off the reserve requirement list, so banks can now lend more easily. The Fed is taking unprecedented action to keep rates low, to keep the system liquefied, and it goes on and on. So this is no surprise with the home prices and the sales both. Okay, and the big thing that we discuss here on this channel, one of the big things is what's going to happen after there's no longer an incentive to keep these markets propped up? Are you prepared for that? Are you prepared for a devastating economic collapse? Because it's coming. And many people will argue that it's already here. Just because it's now there's restrictions on foreclosures and evictions, that's just duct tape on a broken bridge. It's not going to help anything in the long run. These are temporary solutions, right? We're not seeing any major structural changes. Everything that collapsed the markets and the economy back in 2008 is 10 times worse now. Right? The manipulation, the assistance, it's all being propped up to even a larger degree now. And we're going to talk about Social Security benefits being slashed here in the future. They're going to be slashed here in a moment. But let's take a look at this chart right here. It now takes more than a year's pay to cover basic needs. Now what they did here was they added up the basic costs of just the bare necessities: housing, food, energy. Now if you live out in the woods or off grid, this is going to be different, but anyone living in the digitally connected world now has to pay more versus what the average wage is. So wages are not keeping up with prices, just the basics. Even if you want just a moderate 1 or 2 bedroom apartment, you now have to pay more because of inflation and because of low and stagnant wages and unemployment. You now have to pay more than you earn on average. Now median and average, they're two different things, but overall most people are barely scraping by or not getting by and having to rely on handouts. This is a very dangerous situation to be in, but it's not new. This has been happening for decades when it comes to dependence. It's been many, many years, and we've went over the numbers here many times. Over 40 million people rely on food stamps or some other government food assistance program. 70% of people living paycheck to paycheck. People working certain jobs, low-paying jobs that also qualify for other benefits and handouts even though they're employed because we have such low wages. And this next economic shift is going to be in what I call a K-shaped recovery. There's going to be some people that are going to go up with the upward slope in the letter K. That's going to be mostly the top 10%, unfortunately. The bottom 90% are going to see the downslope in the letter K. It's going to be a K-shaped recovery instead of a V-shaped recovery. Okay, the haves and the have-nots. The haves, they're waiting for a collapse. They're waiting for prices to come down. They're waiting for deflation. Then they can come in and scoop up assets for pennies on the dollar. This is why it's still important, even though we're going to see inflation run out of control at some point. It's important to prepare for both possibilities, both outcomes. A recent article right here, this is out of fa.mag.com, that's Financial Advisor. Don't count on Social Security benefits, top advisor warns. Now when I talk about this, I get many people saying, JJ, I pay into this. What do you mean that I'm not going to get Social Security? Well, you might, but you might not. Do you really think a country and a government that cannot balance its own budget is going to be there for you endlessly, forever? I mean, do you think that there's not going to be problems funding Social Security? Well, right here, don't count on full Social Security benefits, top advisor warns. Financial advisors should not plan on their clients receiving their full Social Security benefits when they develop their retirement plans, according to Joel Redmond, a Syracuse-based senior financial planner and senior vice president at Key Private Bank. And it continues, instead, because the system is already stressed and it's not known how it will be fixed, advisors should plan on their clients receiving 75 to 80% of their projected benefits, right? How are these people, these seniors, retirees on fixed incomes, going to survive when we have a group of bankers in the banking system that pushes inflation? They want inflation. Okay, inflation keeps the illusion alive. When there's rising prices, it keeps this Ponzi scheme economy illusion looking pretty good. You can point to the stock market. Banks can loan out a bunch of money and push home prices higher. But when it stops, when the lending stops, when the system fails, or when there's some other event, and I expect more events or an event in the near future, look out, because it's going to be devastating. You guys want to prepare. Thanks for watching this report. Going to cut it a little bit short here today. Hope everybody has a good weekend. I hope to see you on the weekend. Until then, stay prepared. I know a lot of people are going through difficult times. Try to stay positive. Maybe we'll see a silver lining in all of this once this comes down. But sometimes you have to allow failure to happen before you can succeed. So imagine if you're building a house with rotten wood. Are you going to keep on trying to add to the structure of the home with more rotten wood, or are you just going to forget about it, move on to the next project, get some good wood, and build a solid house? That's what we need to do. We need to let the failed system fail, but unfortunately we have powers that are not letting it fail. Prices are distorted. A lot of people are jumping in right now. Like I said earlier, people are buying homes. If you're paying $2,000 a month in rent in a city and you go buy a home and now you're paying $1,000 on your home payment, that still maybe not be a bad move. There's not bubbles in every location, right? Real estate is very local. So when you say home prices are high, not always. It still may be a good decision to buy a home, maybe in some other states. Right now, California, I'm not doing it. I would love to move further out into the country and rent my current residence out. I would love to do that. That would be a great move on my end. But right now at these prices, it doesn't make sense. And like I said earlier, maybe this will go into hyperinflation without any bout of deflation. But if you're prepared for both, you're going to be in the best position. Thanks for watching, everybody. Love you. Stay well. Bye for now.